That is the fee Raj paid at a Western Union counter in Edison, New Jersey. A 58-year-old Indian man, a permanent resident since 2014, works 12-hour shifts managing a Dunkin' Donuts franchise every single month for 9 years, sending money back home to his elderly mother in Lucknow and his younger brother's family in Kanpur. $20,800 like clockwork, the 15th of every month. 9 years, not a single month missed until March 2026, when he missed a month. Not because he forgot, because he could not, because his bank account was frozen, a hold placed by Bank of America. Reason listed, suspicious activity review pending federal inquiry. 48 hours later, 2 agents from Homeland Security investigations were sitting in the parking lot of his Dunkin' Donuts location in Woodbridge. They had a manila folder with 73 pages inside. Every single Western Union receipt, every bank statement, his last 4 tax returns, total transfers identified, $291,000 over 9 years. They looked at his W-2 annual salary, $44,800. They looked at the transfer total. They asked one question, Mr. Sharma, how does a man earning $44,000 send $291,000 out of the country? He had a perfectly legal answer. He co-owns the franchise with his wife. She earns separately. He has rental income from a small property in Queens. All of it reported on his taxes. All of it completely legitimate. But that did not matter. The investigation was already underway. The SAR had already been filed. His name was already in the FinCEN database, and under the IRS-ICE data sharing agreement signed in April 2025, his tax return, the very document that proved his innocence, was the same document that placed him on their radar in the first place. Raj is doing well today. He was cleared after 11 weeks and $9,000 in legal fees. But 11 weeks of frozen accounts meant he could not pay his suppliers, could not make payroll, could not send his mother her monthly support. His 79-year-old diabetic mother went without financial assistance for the first time in nearly a decade. This is what the system does in 2026, not to criminals, not to drug traffickers, to ordinary hardworking Indian men running Dunkin' Donuts franchises and sending money to their mothers. And the most alarming part, Raj did nothing wrong. He never structured transactions, he never concealed income. He filed every tax return on time. He still became the subject of an investigation because the rules have changed and nobody informed him. Today, I am going to tell you everything Raj did not know. 5 rules, 5 traps, 5 protections. By the end of this video, you will understand exactly how the United States government tracks every dollar you send home and exactly what you need to do so that you never find yourself in Raj's situation. Let us begin. Let me start with the number everyone has heard but almost nobody understands correctly, $10,000. Here is the law. Now, under the Bank Secrecy Act of 1970, every financial institution in the United States, every bank, every credit union, every check-cashing store, every Western Union, every MoneyGram, every Hawala agent is required by federal law to file a currency transaction report called a CTR with the Financial Crimes Enforcement Network, which is FinCEN, a division of the United States Treasury. This CTR must be filed anytime a customer conducts a cash transaction of $10,000 or more in a single business day. It does not matter if you are depositing, withdrawing, exchanging, or transferring. If the total in one day reaches $10,000, a report is automatically generated and sent to FinCEN. Now, here is what most people get wrong. They think, okay, I will just send $9,999 and I am safe. That is not safe. That is a federal crime. It is called structuring, and it is codified under Title 31, United States Code, Section 5324. The law states, and I am reading from the actual statute, no person shall, for the purpose of evading the reporting requirement, structure or assist in structuring any transaction with one or more domestic financial institutions. The penalty? Up to 5 years in federal prison, up to $250,000 in fines for individuals. For corporations, the fine increases to $500,000. Let me give you a real case. In 2005, a man named Hasmukh Gandhi in Pleasant Hill, Texas, a convenience store owner, was sentenced to 2 years in federal prison for structuring. He made multiple cash deposits, each one just below $10,000. The bank identified the pattern, filed a report. The IRS Criminal Investigation Division opened a case. He went to prison. The point is straightforward. Do not attempt to outsmart this system by dividing your money into smaller amounts. The algorithm is specifically designed to detect exactly that behavior. Banks are trained to recognize it. And if a bank suspects you are structuring, even if your individual transactions fall below $10,000, they will file a suspicious activity report, a SAR, and that SAR goes directly to FinCEN. Now, here is where things become significantly more serious for immigrants specifically. On November 28, 2025, FinCEN issued a brand new alert, and I have the document right here titled Alert on Proceeds from Funds Transfers Involving Illegal Aliens. In this alert, FinCEN instructed every money service business in America, meaning every Western Union, MoneyGram, Remitly agent, check casher, and Hawala operator that they must file a suspicious activity report for any transaction involving at least $2,000 if the MSB knows, suspects, or has reason to suspect that the funds are derived from unlawful employment or otherwise illicitly obtained. Let me repeat that threshold. $2,000, not $10,000, $2,000. This means if you walk into a Western Union location and you are sending $2,000 and the agent has reason to suspect your income source is questionable, they are legally required to file a SAR on you. What gives them reason to suspect? The FinCEN alert lists specific red flags, frequent transfers in round amounts, transfers that appear inconsistent with the sender's stated occupation, multiple transfers to different recipients in the same region, use of multiple locations to avoid detection, and incomplete or inconsistent identification documents. Now, I want you to consider how many of these red flags apply to ordinary, law-abiding immigrants who simply send money home every month. You drive for a rideshare company. You work in construction, you work at a restaurant, and you send $1,500 or $20,500 every single month to your family. To the algorithm, that pattern appears suspicious. And here is the critical connection. That SAR does not simply remain in a FinCEN database. It gets shared under the USA Patriot Act and subsequent executive orders. SARs can be accessed by over 300 federal, state, and local law enforcement agencies. That includes ICE, that includes Homeland Security investigations, that includes the FBI. Now we get to the part that changed everything in 2025. This is the development that turned the IRS, the tax agency, into an immigration enforcement instrument. On April 7, 2025, Treasury Secretary Scott Bessent and DHS Secretary Kristi Noem signed a formal data sharing agreement between the Internal Revenue Service and Immigration and Customs Enforcement. Under this agreement, ICE can submit names and addresses of suspected undocumented immigrants to the IRS. The IRS then cross-references those names against its taxpayer database, your W-2s, your 1099s, your tax returns, and sends back confirmation of identity, address information, and employment data. In the first batch alone, ICE submitted 1.28 million names to the IRS. The IRS verified 47,289 of those individuals and transmitted their information back to ICE. Let me restate that clearly. 47,000 people had their tax data handed over to immigration enforcement. On May 13, 2025, U.S. District Judge Dabney Friedrich denied a request by immigrant advocacy groups to block this data sharing. The court ruled that the shared information does not fall under the IRS privacy protections of Section 6103 of the Internal Revenue Code. Then in February 2026, something even more concerning emerged. Tax notes reported that the IRS acknowledged it had inadvertently shared taxpayer information beyond what the agreement permitted. They accidentally provided ICE with data on individuals who were not even on the original request list. So let me connect the dots for you. You file your taxes, which the government instructs you to do. You report your income, which the government instructs you to do. You use an ITN number because you do not have a social security number. And now that same tax return can be used to locate you, identify your employer, confirm your address, and deliver all of that information to ICE for enforcement action. This is not theory. This is not speculation. Court documents confirm it. IRS acknowledgments confirm it. The data pipeline is operational. On top of the surveillance, there is now a brand new tax specifically designed to apply to immigrants who send funds abroad. The One Big Beautiful Bill Act, signed into law on July 4, 2025, includes Section 4475, which imposes a 1% excise tax on all remittance transfers sent from the United States to any foreign country. Let me read you the exact language. There is hereby imposed on any remittance transfer a tax equal to 1% of the amount of such transfer. The tax shall be paid by the sender. This tax took effect on January 1, 2026. If you sent money home on January 2, 2026, using cash at a Western Union or MoneyGram location, you already paid this tax. Now here is the critical exemption. The 1% tax does not apply if your transfer is funded by Number 1, a withdrawal from a U.S. bank account. Number 2, a U.S.-issued debit card. Number 3, a U.S.-issued credit card. The tax only applies to transfers funded with cash, money orders, or cashier's checks. Let me give you a real-world example. You send $500 in cash to your mother in Mexico every month. Under the new law, $5 per transaction goes to the federal government as an excise tax. That is $60 per year. Over 10 years, that is $600 gone, purely in tax on your own earned money that you already paid income tax on. But here is the deeper concern. If you do not have a U.S. bank account, perhaps because you lack proper documentation, perhaps because banks have begun closing accounts belonging to immigrants, you are compelled to use cash. And if you are compelled to use cash, you are compelled to pay the tax. And every single one of those cash transactions is also being reported and monitored under the $2,000 SAR threshold I just described. So you are being taxed and surveilled simultaneously. That is the 2026 reality. The numbers are significant. In 2024, immigrants in America sent over $93 billion in remittances abroad. The Congressional Budget Office estimates this 1% tax will generate nearly $10 billion over the next decade. That is $10 billion drawn directly from immigrant families. There is one more layer most people are unaware of. On March 11, 2025, FinCEN issued a geographic targeting order, called a GTO, specifically for money service businesses operating near the United States-Mexico border. Under this GTO, MSBs in designated border areas must file reports for all transactions above a specified lower threshold, significantly below the standard $10,000 CTR requirement. The exact threshold varies by region, but the directive explicitly requires enhanced monitoring of all cross-border remittance activity. This means if you live in Texas, Arizona, New Mexico, or Southern California and you use a local money transfer agent, your transactions face an even lower reporting bar than the rest of the country. The GTO was issued under the authority of the USA Patriot Act, Section 311, which allows FinCEN to designate geographic areas of primary money laundering concern. The practical effect is that millions of immigrant families living near the border face heightened financial scrutiny simply because of their zip code. Let me explain the enforcement chain, how a simple money transfer can result in agents appearing at your door. Step 1. You send money. The MSB files a SAR or CTR with FinCEN. Step 2. FinCEN's database flags the transaction based on pattern analysis, multiple SARs from the same individual, high-frequency transfers, amounts that suggest income inconsistent with declared employment. Step 3. Under the IRS-ICE data sharing agreement, ICE submits your name to the IRS. The IRS confirms whether you have filed taxes, what income you reported, and what address you provided. Step 4. If your reported income does not align with your transfer volume, for example, you reported $22,000 in annual income but sent $45,000 abroad, that discrepancy triggers an investigation referral to Homeland Security investigations. Step 5. HSI opens a case. They may conduct surveillance. They may visit your home. They may visit your employer. They may subpoena your bank records. This entire chain can begin with a single $2,000 Western Union transfer, not $10,000, $2,000. I do not want to simply inform you of these risks. I want to help you protect yourself. Here are 5 concrete steps every immigrant sending money home must take right now. Step 1. Use electronic transfers from a U.S. bank account whenever possible. If you have a bank account, use it. Transfer funds electronically. This avoids the 1% remittance tax entirely and reduces the likelihood of a SAR being filed because electronic transfers from verified bank accounts carry lower suspicion scores. Step 2. Never structure your transactions. Do not divide a $12,000 transfer into 3 $4,000 transactions. Do not use multiple locations on the same day. Do not ask family members to send on your behalf to circumvent thresholds. All of this constitutes federal structuring and carries up to 5 years in prison under 31 U.S.C. 5324. Step 3. Maintain records of your income source. If an agent ever questions the origin of your funds, you need documentation. Keep pay stubs, bank statements, tax returns, and W-2s or 1099s organized and accessible. If your income is legitimate, documentation is your most powerful defense. Step 4. File your taxes properly and on time. I understand this may seem counterintuitive given what I shared about the IRS-ICE pipeline, but here is the reality. Not filing taxes creates its own serious problems: penalties, interest, inability to adjust immigration status, inability to demonstrate continuous presence. The important thing is to file correctly and to be aware that your tax data may be shared. Consult with an immigration-aware tax professional. Step 5. Consider opening a joint bank account with a trusted family member who has proper documentation. Many banks permit joint accounts. If your family member has a Social Security number and a U.S. bank account, electronic transfers from that account to your relatives abroad will not trigger the remittance tax and will carry a lower surveillance risk. Let me put real numbers on this so you can clearly understand the total cost of sending money home in 2026. Scenario 1. An undocumented worker with no bank account sends $2,000 per month in cash through Western Union to Mexico. Monthly cost: $20 in remittance tax, plus a Western Union fee of approximately $10 to $15, plus SAR risk on every single transaction because it exceeds $2,000. Annual cost: $240 in tax alone, plus 12 SARs filed under your name per year, plus your pattern flagged in the FinCEN database. Scenario 2. A green card holder with a Chase bank account sends $2,000 per month electronically via Zelle or wire transfer. Monthly cost: zero remittance tax because it is electronic from a bank account. Minimal SAR risk because of verified identity, verified income, and a verified account. Annual cost: possibly $50 to $100 in wire fees, but zero tax, zero SARs, zero FinCEN flags. The difference between these two scenarios is not just financial, it is freedom, it is safety. It is whether agents appear at your door or not. I need to address this directly because I know many of you use informal transfer systems, Hawala, Hundi, FinCEN, whatever it may be called in your community. Here is the legal reality. Operating as an unlicensed money service business in the United States is a federal crime under 18 U.S.C. 1960. Penalty: up to 5 years in prison. If the funds are connected to any other criminal activity, tax issues, immigration violations, anything, the penalty escalates to 20 years. In the 2026 National Money Laundering Risk Assessment published by the U.S. Treasury, Hawala networks are specifically identified as a high-risk category for illicit cross-border transfers. Does this mean every Hawala transaction leads to prosecution? No. but it means that if you are already on FinCEN's radar, if SARs have been filed on you, if your name has gone through the IRS-ICE pipeline, and you are also found to be using informal transfer networks, the legal exposure multiplies significantly. My advice: remain within the formal financial system. Yes, it costs more. Yes, it is monitored. But being inside the system with proper documentation is far safer than operating outside it without any. Let me summarize everything with complete clarity. The $10,000 rule is not the primary concern. It never truly was. The real concern in 2026 is the $2,000 SAR threshold specifically targeting immigrants. The real concern is the IRS-ICE data sharing pipeline that has already exposed 47,000 individuals. The real concern is the 1% remittance tax that penalizes cash users who are disproportionately undocumented immigrants without bank access. The real concern is the geographic targeting orders that create surveillance zones along the border. Every single dollar you send home is now tracked, taxed, and potentially shared with immigration enforcement. This is not a conspiracy. This is not a rumor. I have provided the statutes. I have provided the FinCEN alert document references. I have provided the court ruling dates. I have provided the exact dollar thresholds. Protect yourself, protect your family, follow the 5-step plan I outlined, and share this video with every person you know who sends money home, because most of them have no idea this system exists. If this video helped you understand something you were not previously aware of, hit the like button right now. Subscribe to the Senior USA Hub channel because I cover these issues every single week with detailed analysis and original sources. Drop a comment below and tell me about your situation. Are you sending money through Western Union? Are you using cash? Do you have a bank account? I will personally respond and help guide you. Next week, I am covering the 7 things you must remove from your phone before you arrive at a U.S. airport. CBP's new electronic device search directive went into effect on April 28, 2026, and it affects every single traveler. You do not want to miss that one. Until then, stay informed, stay protected, and I will see you in the next video.